Hey, all, big news out of the Federal Reserve today that can impact your purchasing power when buying a home and subsequently can impact the number of buyers that can afford your home if you're looking to sell. I want to take you through the report from the Fed meeting notes and show you a couple of things that I think will be very important to you if you're considering buying or selling a home. Let's take a look. All right, so the Fed meeting happened several weeks ago. And then the Fed meeting minutes were released today. Those minutes give us kind of all the behind the scenes discussion between the Fed chair and the Fed regional governors, talking about how they see the economy, what kind of actions they think that we need to take. Very important information, kind of gives us that behind the scenes, what everybody's thinking and what they think that they're going to do with the economy. So you can see this is from Market Watch. Fed minutes paint a picture of central bank ready to swiftly abandon its easy policy stance. What we've seen over the last couple of decades with that easy policy stance is low interest rates, historically low interest rates. If you bought or refinanced in the last 5-6 years, you've seen rates as low as 2.5%, 3%. We're hovering around 3 right now. We'll see that in a minute. We've also seen a lot of stimulus money, a lot of free and loose loan requirements from different lenders. And again, all of that makes money move through the economy, makes borrowing easy, which makes home purchases and the real estate market kind of soar. So a couple of things to point out here. Federal Reserve participants generally noted that given their individual outlooks for the economy, the labor market, and inflation, it may become warranted to increase the federal funds rate sooner or at a faster pace than participants had earlier anticipated. So again, there's been widely anticipated that at some point late in 2022, that the Federal Reserve would start raising interest rates to kind of keep inflation in check. Now, based on those Fed notes, they're trying to move up that timetable. One other note here, after reading the minutes, Catherine Judge, who is an economist at CIBC Securities, said she thinks the Fed will begin to shrink the balance sheet in the April-June quarter. That's Q2, quarter two of this year. She thinks that we're going to have an interest rate hike, and then the Fed will start tightening that money policy. What does that mean for you? All right, let's take a look. Right now, this is from Freddie Mac. They're showing a mortgage rates for a 30-year fixed at 3.11% for the best borrowers. You know, high credit scores, no negative marks on your credit, 3.11% for a 30-year fixed rate. 2.33% for a 15-year conventional mortgage. I want you to take a look at this. If we go back to August of 2021, that 30-year rate was at 2.77. It generally has crept up since then, with a little bit of a down period in November, but again, starting back up. What we're seeing is lenders will anticipate the Federal Reserve hiking rates. So they're already starting to move their rates up to account for that coming risk, or what they foresee as the Federal Reserve raising rates. So that's number one. So again, why does that matter to you? I want to show you a loan comparison calculator that I ran from nerdwallet.com. So we got the two loans, exact same amount, $250,000 for each, both with 30-year terms. One with 3.11%, which again, we saw was that current rate for a 30-year conventional mortgage, and one with a 4.5%. So 0.5 or 1.5% rate hike. Here's the difference. Monthly cost $1,069 versus $1,267. So we see almost a $200 increase. That total cost over the life of the loan goes from $384,000 to $456,000. So again, as rates increase at the Federal Reserve level, that doesn't always mean that mortgage rates will increase too, but they generally do. They just don't always move in the same at the same time, because again, mortgage companies are trying to anticipate the rise and get ahead of it. So I am not a sky is falling kind of guy. I'm not ringing an alarm bell. Here's what I want you to know. If you are in the market to buy a home, or you're considering buying a home, you may want to move that time frame up to save a little bit of money, to save on your interest rate, and to save how much you pay over the life of your loan. So if you're looking, maybe move that time frame up if you are able to. If you're not looking, this doesn't mean a whole lot to you other than other interest rates that you have can go up or will go up as the Federal Reserve hikes rates. So if you're looking, you're in the market, you want to be connected with a lender, give us a call. We can connect you with one of our preferred local Southern Indiana realtors, lenders, and they can get you pre-approved, let you know what your monthly payment's going to be, what your interest rate will be. And if you have any other questions about this or anything real estate related, email us at 812living@gmail.com, 812living@gmail.com. Thanks.